The S&P was flat on the day, closing at 6092.16, but in yesterday's trading session, we finally tagged the big 6100 level, which has been the largest gamma exposure level going back the last 3 or 4 weeks. We've been highlighting this in a number of our YouTube videos, finally tagging that yesterday, and today basically just consolidating right at that strike. The last 3 trading sessions have seen higher highs and higher lows, as the S&P bounced off of support around the 5950 level. Between 5950 and 5970 is a very important support zone, so bulls want to see that zone hold as the market consolidates and moves higher. If we just look up the options chain at higher strikes, we can see gamma exposure now starting to grow all the way up to 6,500. This is something we've been pointing out in our live stream each morning, the growth that we've been seeing in the options chain, which is contributing to larger positive gamma exposure. And just check out this skew here in the options market. Market participants appear to be positioning for a year-end run-up into the mid-6,000s. So obviously we can potentially see pullbacks along the way, but what the options market is telling us is that market participants are betting that those pullbacks will get bought. So we are firmly in a buy the dip environment, and that's essentially what positive gamma exposure tells us. So it's been a really big move for bulls. However, we do want to be cognizant of the potential resistance that we are in. We've also been highlighting this for a while on our YouTube channel here. This 6,000 to 6,100 zone is a big resistance if you just take a step back and look at all the times that 6,100 was rejected, basically between November and February. And so we're coming right up into the top end of that zone now. We think there is some room for caution, and we're actually going to be adjusting our hedges in our portfolio for any kind of pullback. We want to have exposure in this zone here, basically from 6,000 down to the 5,800 level. If we see a pullback into this zone, we want to be able to capture some of that move with our hedges. And so we'll be looking to adjust our hedges up into this zone now that we've made this further move up into the 6,100 strike. This is all part of our portfolio management strategy, locking in long positions while adjusting our hedges. And so you can follow along with all the trades we're making in our options portfolio in real time throughout the trading session. Go to geeksoffinance.com, sign up and become a member. I'll put a link in the description below.
Thanks, Anthony. Very interesting spot that we're at in the market. I have the VIX pulled up with our GEX data graph showing that GEX is very negative right now for the VIX, and looking at our GEX intensity gauge, which compares the current reading to the last year of data, we're getting closer to a negative extreme. On top of the relative comparison of the negative GEX for the VIX, we also are at an interesting spot, being this lower dealer cluster zone, our G2 lower dealer cluster zone, where we see the largest GEX cluster at 17 and not very much below that. We do see some GEX down to 16.5, but most of it is at this 17 area. And of course, the VIX is right between those two right now at 1676. So we have high volume at higher strikes on the VIX all the way up to 35, which you can see here. This isn't a indication that we're immediately going to see a sharp spike in the VIX, but I wouldn't be surprised if we saw some sort of an attempt for the VIX to come back up and retest this 20 area, which is the whole moving average. So we'll just be keeping an eye on that as we go forward.
Thanks, Sean. Next, let's take a look at Netflix. Netflix essentially unchanged on the day, closing at 1275.25, but we did get as high as 3 points shy of the big 1300 level. This has been our target over the last few weeks, and we nearly hit that level today before rejecting. Netflix has been on an amazing run since this April 7th low, all the way down here near the 800 level, rallying about 50% in the last couple of months. Netflix is another name that we've been actively trading, and we actually just closed out a position. We initially entered our position back on June 10th. We saw that there was a large GEX between 1220 and 1300 and appeared to be growing. Netflix at the time had just pulled back into the lower 1200s, and so we took advantage of that by buying an out of the money call debit spread. We bought the 1250 1,300 call debit spread expiring July 3rd. So this was a very short-term play, just a few weeks in duration. And fast forward to today, and we actually just exited the position, locking in $21,450. So this is well over a 100% gain in just a few weeks. And we think in the near term, Netflix could have a harder time reaching higher targets from this point forward. One of the main reasons, just coming back to our current chart, one of the main reasons is that we've reached this upper dealer cluster zone, which is right around this 1,300 strike, like we mentioned, and we're already starting to see a rejection today. This is classic gamma exposure behavior where price reaches the largest gamma exposure clusters and dealer selling pressure kicks in as dealers have to hedge their positions by selling shares of the underlying security. And so that might have started today with this rejection off the 1,300 level. We'll have to wait and see. Volume in the options market basically peaks here at 1,300, and we're not seeing much coming in at higher strikes or gamma exposure. And so at the very least, we expect some consolidation, if not an outright pullback, perhaps into this 50-day EMA.
One thing I noticed today is that most of the major indices did see a negative shift in total net GEX. IWM was no exception. I like to look at IWM for an advanced view of which direction the indices may be moving in the short run. So a sharp move down from negative 75.5 million negative GEX to negative 534 million negative. So it was a deeper move into negative territory, an increase in negative GEX. But I find the chart to be far less certain in terms of where we go immediately. We did see a decline today right down to the whole moving average. We closed below it technically at 211.97. But because of the large red candle and the big sell-off that it took to get to 211.97, it gives me less confidence that we necessarily continue lower after such a down move. So in this case, IWM moved down to the hole. I wouldn't be surprised if we reverse back up tomorrow and headed toward 215 or 220. But either way, it should be fairly decisive as far as whether or not the upside is over. We do have mixed signals here, and overall a GEX picture that has fairly wide targets ranging from 200 to 220.
Thanks, Sean. Let's take a look now at Nvidia. Big move up today, up 4.33%, closing at 154.31. This was a breakout high today as Nvidia broke above recent resistance. It made several attempts to break out above this 150 level back between November and January. Never was able to break out and ultimately rejected into this April 7th low down here. But since then, we've seen nearly a double coming all the way back up to new highs. Looking at the gamma exposure picture, we're seeing concentration between 150 and 160, and that's exactly right in the middle where we're sitting now. So we view this as target reach. We've been calling for a move up into the 150 strike now for the last several weeks. Finally got that move over the last 3 trading sessions. This is again another area where we like to be cautious, even though it does appear we have broken out of this resistance zone. Dealer selling pressure may kick in here on Nvidia, bringing us back into this recent support, which is more down in the 140 range where the 50-day EMA is currently trending up towards. So that's kind of the pullback zone that we're looking for. If Nvidia does pull back into this range, I think that would be a much better entry point for long positions rather than chasing this momentum breakout.
Thanks, Anthony. Let's take a quick look at UNG. We actually have a position in NG futures at the moment, but what's so interesting to me about this current spot is that if you go back to April, ever since those April lows, UNG's done a pretty good job of consolidating in this same general area right around the 15 to 16 mark this whole time. And you can see with the volatility that's occurred, when we've reached that spot, we've typically bounced, even if we came back to revisit it after a few days. And this last move was fairly strong, basically 3 gaps up and then 3 gaps back down. But what caught my eye from a GEX standpoint, besides the technical picture here and the appearance of support going back to April, is that we have these 2 big GEX clusters at 15.5 and at 16. Overall, GEX is positive. And we do have an upside scenario where we could see 17, 18, and potentially even up to 20. So, 20 actually saw some volume in the options market today. that was noteworthy compared to other strikes. So we're watching natural gas, and we like the current setup and the risk reward.
And our limited time promotion is ending soon, but you can still take advantage. $200 off our yearly portfolio manager tier subscription. Use code June 2025 at checkout. We do have a few spots remaining, but it's going to be ending in the next few days, so take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics and algorithmic trading strategies, as well as our community Discord. Our Discord community's got a ton of great traders in there, and you can also follow along in real time as we trade our options portfolio. You can see all the moves we're making. Definitely something to check out when you get a chance. I'll put links in the description below for you guys to check all of that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.